The banking collapse, which started in the US last week with Silicon Valley Bank collapsing and then the Contagion, has now spread to Europe. And what you're looking at here is you're looking at a heat map of the top European banks. And you can see that it's really not a pretty picture. We're going to talk about this potential UK banking collapse, because what's happening here is pretty interesting. Not UK, European banking collapse, because what's happening here is pretty interesting. What you have, if you look at the charts, is you have a very interesting picture playing out. You've got the European banks looking like this, losing 8.56% in total, which is causing the euro to collapse. So you've got the euro collapsing 1.75% against the dollar. And that is the lowest level or the biggest collapse since March 2020, which you'll remember was COVID. And then that's what it looks like on the charts. And then what you've got is you've got the S&P not looking very good, down 2%. But then this chart over here, you got Bitcoin performing very strongly. And again, tackling this opponent of the 200-week moving average. So there's a lot to talk about today, because I think this could be Bitcoin's genesis moment, Bitcoin's pivotal moment. When you get stock markets collapsing, when you get banks collapsing, and you get Bitcoin challenging one of its biggest resistance points, I think we could be up for the beginning of something amazing, special, huge, explosive, cataclysmic, gigantic, you know. As I was saying, we could be seeing something huge, something colossal, something enormous, something giant, something massive, something monstrous, something mammoth, something jumbo, something immense happening here in Bitcoin today. I didn't come up with that segue on my own. It was actually thanks to the thesaurus dictionary helping me do this. So yeah, let's talk about that. Let's talk about Bitcoin. Let's talk about Bitcoin challenging this monster opponent of the 200-week moving average. And even though if you look at the markets are all down. It's a bloodbath on the markets. If you look at Europe, let me show you Europe. So that's Europe. Europe's not looking very good. You got the DAX down 2.68%. You got the FTSE down 2.26%. Technically, the FTSE is not part of Europe. I don't know why they still put it as part of Europe, because some smart people in the UK decided not to go and vote on the day that they voted about Brexit. And as a result, we have a huge separation between the UK and Europe. I remember when I went to Lisbon, they made me, I've got a British passport, they made me wait in the line of all other passports. You know, like, so you're not part of the EU, you can just walk in and scan. I don't know what you guys were thinking when you voted for Brexit, but congratulations, you got what you voted for, or what you never voted for. All right, big show today. Let's just see who's here, who's not here. If you're here, say present. Raymond, if you're here, say present.
Present, motherfuckers. Good morning.
Okay.
Present.
Josh, if you here, say
Present.
I could do the same to Fred, if you're here, say present, bro. Fred doesn't want to talk on the camera. So if you are here, say present. Let me know you're here. Lucifer, I see here. Captain America, you're here. Crypto Dogs, you're here. Say present. Sayonara. That's like sayonara, but sayonara. You say present. All right, guys. We've got a huge show today, Alpha Pack show today. Going to be talking about the European banking collapse. Going to be talking about the Bitcoin bull run that's happening and where this Bitcoin bull run is going from this point. Then we're going to talk about whether the Bitcoin bull run leads to an altcoin bull run. I'm going to show you data. I'm going to show you data to show you which altcoins have been running and why they have been running. It's just in general going to be a very high alpha show. So I've got about 10 seconds to tell you to subscribe to this channel. If you're not already a subscriber, join the 612,000. It's bigger than 612,000. Can you please give me an exact number of our subscribers? I need to know the exact number, because I want to see if we can get the number up. because I like it when number go up. So let me just quickly get the exact number of subscribers, and then we can begin the alpha. So let me just get you. Here we go. We've got to see exactly how many subscribers there are. Hold on. You're going too fast for me. Okay, so this is the subscriber base, 612,647, which effectively means we've got 1,000 subscribers since last night. Now, if you want to see your vote going up, just hit subscribe button now, and you'll see. I know what you guys are going to do. You're going to unsubscribe to resubscribe. So I'm going to see that as well here in the numbers, because this is actually a live dashboard of numbers. Try it. Subscribe quickly. Let's see the numbers go up. It is live, or it's supposed to be live. It is live, supposed to be live. Come on. You can do this. Maybe it's not live. I don't know. Or maybe no one's listening to me. Maybe it moved down one. So someone unsubscribed to resubscribe. I know how these people work. All right, let's get into today's alpha, because there's a lot of alpha to talk about. A lot of alpha to talk about. So let's start off with this European banking collapse, European banking crisis. The banking collapse that started in the US is now spreading to Europe, as you can see. And it's not looking good for the European banks. I mean, this is the European banks. This is the European banking index, if you want to call it that. Also down nearly 9% for the day. Of course, that's killing the euro. And when the euro goes down, what you know for sure is that the 𝗕𝗍𝗃 is going to go up. So this 𝗕𝗍 was doing so well. Remember, it was down at 103.47 just the other day. And now, because the European system is collapsing, what you can see is that the 𝗕𝗍 is getting stronger. So that's what's going on. Of course, that's affecting the US markets. So if you look at the US markets, the S&P is now down 1.7%. That's not a joke. That's quite a big drop. I think the NASDAQ is also down quite a bit. Let's quickly just look at the US Tech 500. NASDAQ is down 1.73%. So big drops in the American market. So it does, if you're in equities today, it does look like a very, very, very scary day. But, despite this, we are seeing something magnificent, amazing in Bitcoin. We're seeing Bitcoin continue on its upward journey, and it is now attacking the 200-week moving average again. Yesterday, it did something very interesting. What it did was it broke through it, but it wasn't just a breakthrough like all the other times. It actually went all the way to $26,580, which means that we took out a lot of the sellers in that wall. And I think that what's going to happen now is I think this time it's actually going to break. And hopefully by Sunday, when we get the weekly break, hopefully on Sunday, we close above this 200-week moving average. And then if we do close above the 200-week moving average, doesn't matter who you are. Doesn't matter if your name's 𝗧𝗲𝗏. Doesn't matter who you are. If you're a bear, you have to change your tune when that happens. You have to change your tune when that happens. And right now, what we're seeing it's Bitcoin. It's not really altcoins. I mean, yes, there are certain altcoins which are really, really running, but not a great day for altcoins. You see, the altcoins aren't really doing very much, except for a few narratives. What are the narratives? Gaming, Chinese coins, artificial intelligence, and layer 2 on Bitcoin. So you don't have to be a genius to work out which narratives are running. It's just gaming, layer 2 on Ethereum, layer 2 on Bitcoin, Chinese coins, anything to do with China. We'll show you why these coins are running. And we'll show you a whole lot of other coins that are running. You can also see that the Bitcoin dominance, again, shows you that this is right now, it's a Bitcoin run. It's not an altcoin run. It's a Bitcoin run. And the question is whether this Bitcoin run will actually move into the altcoins. I'm going to show you some data that can give you some clues to see whether this is actually happening. So let's talk about the big story of the day. The big story of the day is the spread of the contagion, the US banking contagion, which started in the US pretty much early last week, you could say, which culminated or peaked on Friday when Silicon Valley Bank was halted or shut down. That seems to have now spread to Europe. And you can see that with it, it's taken down the entire Europe stock market index. All the indices are down between 3 and 4%. And the reason for this big collapse is Credit Suisse. So Credit Suisse is around the 17th, 18th, or 20th biggest bank in Europe. And what it has done is it has gone from, if you look at where it was in July 2007, okay, that's a long time ago. It was a bank that was trading at $78. Now it's looking like it's going to trade at $1.77 when the market opens in the US. The market in the US is not open, but you can see it's trading at $1.77 in the pre-market. Now, as I said to you, it is one of the biggest banks in the US. This is from 2021, so it's not really accurate, but it is one of the biggest banks in the US. What's happening at this bank? Well, it's pretty simple. People are pulling their money out of the bank. That's it. People pulling their money out of the bank. You can see that in Q4 alone last year, over 100 billion Swiss francs was withdrawn from the banks. Okay, now 100 billion Swiss francs is just over $100 billion, and that was withdrawn from this bank. It didn't make their life any easier that they reported a while back that not a while back, but pretty recently, that they are delaying their results because of some financial reporting anomalies, I think they called it. And now when their CEO was quizzed as to whether the bank is going to collapse, he says, look, we don't think that our bank is going to collapse. He says, we are governed by much tighter regulations that make our bank's liquidity a whole lot more stable. Be that as it may, it has caused a contagion in all the US, in all the European banks. And what you can see when I say contagion, a lot of these banks have actually stopped trading. So you see like Societe Generale, SC, SG, they've been halted after an 8.3% drop. They've been gone. Paribas, BNP Paribas, down over 10%. I think trade in that was halted. That is what the banking sector looked like. All these banks down as a result of this contagion. Now, as I said, the CEO, he says he doesn't think that the bank is going to collapse. He says the bank is pretty much stable. The Swiss National Bank, which is like the central bank in Switzerland, they're saying, look, we decline to comment. So unlike the Fed, which came in and bailed out the banks as soon as something started to happen, the Swiss central bank said, well, we're not commenting at this stage. We're not jumping in to rescue the bank at this stage. Then we turn our attention to the biggest shareholders in the bank. So who are the biggest shareholders in the bank? They are the Saudi Arabians. The Saudi Arabians own, I think, 9.9% of this bank. Let's just quickly check. I think, yeah. So they own 9.9% of Credit Suisse. And they're saying, look, we're not going to bail out this bank. Listen to how adamant they were.
The answer is absolutely not, for many reasons. I'll cite the simplest reason, which is regulatory and statutory. We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator, and we're not inclined to get into a new regulatory regime.
Okay, so he says, I mean, he used very strong words. Absolutely not. He's absolutely not bailing out this bank. So what we can see happening here is we're seeing something very, very interesting happening. We're seeing the banking collapse continue. Started in the US because the Fed increased interest rates way too quickly. And now that same banking contagion is spreading to Europe. In the US, the regulators were very, very, very quick to jump in and stop the bank run by saying, look, we are going to backstop any depositors' funds. And when they said that, effectively what they did was they stopped any reason for further bank runs. But so far that hasn't happened in Europe. In fact, in Europe, it's a lot harder because who's going to step in? Is it going to be the European Central Bank? Is it going to be the Swiss Central Bank? It's much more complicated in Europe. And so now we're in a position where the US banks are collapsing, the European banks are collapsing. And as 𝗪𝗪𝗿, and just by the way, James is actually a very, very good analyst. If you aren't following him, I suggest you follow him. Small account, but great account, because you'll see we do use a lot of his research every day. So if you want to go and give a quick follow to 𝗪𝗪𝗿𝗍24, give him a quick follow out there. Anyway, he says making the argument for Bitcoin a lot easier. You can see it because what you can see is when the banks are collapsing, what is happening to Bitcoin? Let's quickly check what's going on with Bitcoin. Again, challenging, still just above 25,000, and challenging that critical key point. What we also saw yesterday, I showed you this chart yesterday, where the correlation between the banking shares and Bitcoin has now gone inverse. So it's almost like this is the reason why Bitcoin was created. Bitcoin was created in the 2008 banking collapse to exactly insulate people against the collapse of the banks and against the collapse of centralization. And I went onto a Twitter Spaces last night, and a lot of the people in the Twitter Spaces weren't Bitcoin people. And I asked them a very simple question. I said, look, I'm not saying that everybody must have all their money into Bitcoin, but I am saying that most people should have a small part of their portfolios in Bitcoin. And the reason why I said that is very simple. Imagine that you were banking with Silicon Valley Bank, and imagine on Friday, they stopped withdrawals and deposits of money into Silicon Valley Bank. Let's just play this out. And you needed money to get through the week or the weekend while they were resolving the problems. Now, yes, the Fed resolved the problems in 3 days, but it didn't have to be 3 days. The question is, where else would you have liked to have money? I mean, you could have had money in property. That would have been great. But how's that going to help you to pay your bills, your food, your gas bills, and everything else that you need to pay while the Fed was potentially bailing out the banks? So that's the question I asked, and no one had an answer other than to say something like Bitcoin. You're also seeing that now Bitcoin is becoming not correlated to any of the other assets. It's almost like we're having this moment in Bitcoin where Bitcoin has broken away from all the other assets. It's very small correlation to the stock market, 0.18. Very small correlation to gold, very small correlation to DXY. In fact, a negative correlation to DXY, obviously a negative correlation to the US 10-year. You're seeing Bitcoin really start a cycle of its own where it might actually be coming into its next Genesis moment. We've already had one, but possibly the next Genesis moment. You can see that when you compare Bitcoin to the stock market, this is the relative performance against the stock market. And relative to the stock market, Bitcoin is now starting to perform really, really well. In fact, it's starting to break out, showing that we could be getting into another bull run. A lot of this bull run depends on liquidity, because what we know is that Bitcoin is very, very, very sensitive to liquidity in the markets. And we can talk about liquidity. In fact, we will talk about liquidity for a little bit. And now I'm going to show you where this liquidity is coming from right now. But one thing that is worth pointing out is that we have had two very good pieces of data. So the first piece of data that we had was we had PPI, which is producer price index, which is the change in manufacturing inflation. And if you look at the change in manufacturing inflation, there's a lot to look at here. So the previous manufacturing inflation, the previous reading was 6%. The forecast for this PPI was 5.4%. We actually got 4.6%, which is the largest decline in PPI that we've had for a long, long, long time. And in fact, look at the rate of change. So here we went down by 1.2%. Here we went down by 0.2%. Here we went down by 1.4%. This is the biggest decline in inflation, in producer inflation. Now, typically, producer inflation will lead consumer inflation. Why? Because what is producer inflation? It is the inflation that producers are feeling when they create products and services. But let's call it product for now. It takes about a month, 2 months, 3 months for those products to actually get onto the shelf. In a month or 2 months or 3 months, we can see this inflation actually filtering to the consumer in the form of CPI. So we've got a very good PPI reading. We got a very good CPI reading, or we got a CPI reading, which was, again, a huge decline. So a 0.4% decline in CPI. Yeah, I did speak to you about that. And what we saw when that happened is we see the US 2-year Treasury yield dropping to 3.875. You see that the US 2-year Treasury yield. Why am I focused on the US 2-year Treasury yield? Because the 2-year Treasury yield shows us where the market is pricing interest rates in 2 years. Right now, the interest rates are at about 4.5 to 4.75%. But the market's telling you that in 2 years, interest rates are going to be about 3.87%. So they're expecting the interest rates to start coming down quite quickly, and that will bring more liquidity into the market. The chart that everybody's been watching is this chart over here. This chart over here is the probability that the Fed increases interest rates in their next meeting. So I want to show you how confused the market is, because it's getting good news, then bad news, then good news, then bad news. On the one hand, the Fed wants to increase interest rates. On the other hand, the banks are collapsing. We're getting a good CPI reading. We're getting a brilliant, unbelievable, give me some more synonyms for unbelievable, good, magical PPI reading. When you get all those amazing, incredible, amazing, cataclysmic, come on, give me with some synonyms here, guys. When you get that, help me in the chat. Come on, help me in the chat. So now I want to refresh because the market doesn't know what's going on here. You can see this was just before the show. It was about 50-50, 45-55 to be fair. Now let's refresh together. This has become the most exciting chart of the day. Is like the one you actually can't directly trade. Bang! You see, now it's going to no interest rate hike. No interest rate hike. 60% chance of no interest rate hike. Why? Because we got this orgasmic. No, you can't use the word orgasmic, bro. Come on. We got this. Yeah, we got this metamorphic, 𝗪𝗶𝗱𝗏, stupendous, great, awesome, magnificent, based, unbelievable, fantastic, 𝗕𝗆𝗆𝗆 PPI numbers. You see. And so now the market's saying, well, hold on, you're not going to get an interest rate increase. So market is forecasting no interest rate increase in March. Now in May, no interest rate increase, but very fine margin. In June, interest rate decrease. Market now pricing in an interest rate decrease in June. In July, another decrease. I mean, come on, this is ridiculous. Market doesn't know what it's talking about. This is now, market's being very hard. And come on, another decrease? No, come on. So hold on, I just want to get this right. I just want to make sure I understand this. So the market's forecasting no increase, then one decrease, two decreases. Okay, let's see, two decreases, three decreases, still three decreases. Still three decreases. Four decreases this year. Four. No ways, market's dreaming. But I mean, it's good. I mean, it just shows you that sentiment around interest rates is actually starting to change. So, I mean, I do think that the market is wrong here. I actually agree with Larry Fink from BlackRock. Remember, whatever Larry Fink says, you have to listen to. I think we do get some more interest rate increases. The reason why I think we do is because the Fed has stopped any chance of a bank run. Now, remember, next week, there is, on the 22nd, there is going to be an interest rate decision, a Fed interest rate decision. We are going to be here live. We're going to be bringing you a Fed interest rate special show, live streaming show. So bring your friends, and we can all do it together. The Fed decreasing interest rates all plays into the narrative of liquidity. And what we know for sure is that when you get increased liquidity on the market, the riskiest assets, the smallest asset classes, the ones that have little liquidity relative to the big asset classes, they are the ones that are going to run the most and the hardest. We saw that with COVID. As soon as money started going into the economy, all of a sudden, Bitcoin did a 5x or a 6x. When money started going out of the economy, Bitcoin was the first asset, the most sensitive asset to go down, Bitcoin and crypto. I mean, yes, that, and of course, Sam Bankman-Fried. I mean, combine that, it's just a magical cocktail for a collapse. But what we know is that Bitcoin is extremely sensitive to liquidity. You put more money into the economy, the price of Bitcoin goes up. You take money out of the economy, the price of Bitcoin goes down. And it does this very quickly. So if we want to understand whether Bitcoin is going to go up or down, we need to understand liquidity. And it's not only US liquidity, although let's look at US liquidity. The Treasury are drawing down on their general account to fund operations. Okay, so the Treasury, the Fed is putting money, not the Fed, sorry, the Treasury is putting money into the economy. Money is flowing out of the Fed's reverse repo facility, which is also increasing liquidity. Now, at the same time, the Fed are doing QT, which is quantitative tightening, taking money out of the economy. But the money that they're putting in is bigger than the money that they're taking out. So net, you have a higher liquidity in the US. I showed you this chart yesterday. You have a higher liquidity in the US, but very little. You have a high liquidity in China, in Asia, and you've got the Japanese bank going absolutely apeshit crazy, putting huge liquidity into the market, In fact, so much that they're actually starting to buy equities. They're actually going into the market and saying, you want more money in the market? Let us buy equities. That's basically what it is. It's global liquidity going crazy. Then we start seeing that the Chinese banks, the Chinese central bank, look at that, is putting crazy amounts of money into the market. Crazy. They're trying to restart their economy. That is why this is what we're calling an Asian-led pump, because it's led by Asia. It's this money over here that is driving the Bitcoin price. Look at how beautifully correlated the Bitcoin price is correlated with Asia. So if you're watching English YouTube other than me, if you're watching any other English YouTube, you're wasting your time. You should be watching the Chinese and the Asian streamers because they can tell you what's coming into the market. And what we're seeing now is we are seeing that we are getting money flowing into Bitcoin. It's a Bitcoin-led rally. You could see it. If you look here, let me show you. You look at Bitcoin over here. That is, here it is. Here's the Bitcoin price. There's the Bitcoin price, 25,000. But that's the dominance. This is showing you that the money is flowing into Bitcoin and the money is not flowing into alts. Now, this is a very, very, very positive sign. And the reason why this is a very positive sign, by the way, tomorrow's stream is going to be done in Mandarin. So you better get your tomorrow I'm doing the stream. I'm doing the stream in Mandarin. Someone says check Credit Suisse. They are down 30%. Yeah, they were, but they were down more than that in the pre-market. They were down more than that in the pre-market. So here it is. Okay, so now you have this Bitcoin market dominance pump, this Bitcoin dominance pump, which is super encouraging, especially if you've been here for a long period of time. And I want to show you why. So this is done again by TED Talks Macro. And he says, and I remember this when I did the research, he said, every Bitcoin bull market has commenced a spike in BTC dominance, as has every Bitcoin bear market. But we know we've already been in a bear market. So now when we get the spike of dominance, here's the spike of dominance that is towards the end of 2021. Let's look at the Bitcoin price towards the end of 2021. Towards the end of 2020. Here we go. Let's go towards the end of 2020. Let's call it somewhere over there. Look what happened. Bang. You got a Bitcoin spike first. Bitcoin spiked. Bitcoin came down. As Bitcoin came down, the altcoin started running and Bitcoin started running, and we got this huge bull market. So we're seeing it almost repeat itself again. Look at this 2019. Around 2019 March or April. Let's go back to 2019 March or April. Okay, 2019 around March, April. Look what happened. Bitcoin spikes, dominant spikes, and then let's actually go to total. Let me get you a chart of total 2. Yeah, let's look at total 2. Total 2. That's the crypto market cap. And let's go to 2019. Let's quickly go to 2019 just so we can see. So if we go back here, we go to 2019, we say, in fact, let's just close that. So let's go to 2019. We can see there was a Bitcoin spike around May 2019. Then we go check the altcoins. Let's look at what happened around May 2019. So March, April, 2019, around there. Okay, sorry, March, April. So the altcoins come down and then the altcoins start to go up again. So that's exactly what we're starting to see now. We're seeing the beginning of a pump. First, Bitcoin pumps, the Bitcoin dominance goes up, and then generally, the pump will flow into major altcoins because people take profits on Bitcoin. And then from the major altcoins, we're going to go into the minor altcoins. It's happened in most cycles, and I suspect that it may happen here. And it's a function of liquidity. It's a function of people having more money to spend. Now, we do know that there's Operation Choke Point in the United States, and they're destroying the on-ramps and off-ramps. But in Asia, there's a lot of liquidity coming into the market. And then you've also got like some other things in the market. You've got 𝗧𝗍 saying that he's going to spend $1 billion. He hasn't started spending it. Here is the wallet with potentially the $1 billion to spend, hasn't started spending it. There's also a very ironic liquidity thing here. So, you know, 𝗧𝗍 and 𝗧𝗍 from 3 Arrows Capital blew themselves up, took down a whole lot of everybody with them because of their high leverage. Now, they have started an exchange, and the exchange is called Open Exchange. I think it launches sometime pretty soon. And what they are starting to do is they're starting to buy claims. So they're saying, look, if you want to, if you got a claim against Celsius, against FTX, against Voyager, against whoever, and you want to trade that claim for Bitcoin, well, give us your claim as collateral. We will then give you liquidity. Now, the irony here is that if Bitcoin, if Solana goes up and Bitcoin goes up, these insolvent estates like the Celsius estate and the FTX estate may actually be worth a lot more than people have got. The same thing with Mt. Gox. Because when Mt. Gox went insolvent, the price of a Bitcoin was $300, $400, $500. When the people get paid, they're getting paid about, I don't know, 50 times what the value of their Bitcoin are. So that again could bring more liquidity into the market. So it's all a function of liquidity. I do think that Bitcoin is having its next moment now. And I mean, the charts are showing you exactly the same thing. The charts are showing you exactly the same thing. Pretty much what they're saying. It's just, we know this. It's an old chart. Bitcoin, Ethereum, large cap alts, small cap alts. It's not really working like that now, because now there's a whole lot of different narratives which are running. As you can see, the narratives, as I showed you, is AI, gaming, Bitcoin layer 2, Ethereum layer 2s as well. And you can see I'm not the only genius who can work this out. Everyone's saying it. AI coins, BTC 5, BTC layer 2, ZK, and then of course the China coins. See Chinese players, BTC. So that's pretty much what's going on here. So let's quickly look at the narratives that are running and why they're running. First narrative, of course, that's running is Asia, China. Cox is the leader of that. So we are seeing a lot of institutions actually start buying Conflux. I see that KuCoin, one of our sponsors, has actually started buying CFX, Conflux. Conflux flying. I don't know if it's, let's just see if we can still see it in the bubbles. Where is it in the bubbles? Where? Okay, let's look at it. Let's look for it here. CFX had an unbelievable week. This is like they call this the Chinese Ethereum or the Chinese Matic. And if you look at what it's done in the last couple of days, let's quickly go there. So it's come from on the 13th of March from 14 cents, now trading at 33 cents. So you would have made yourself a good 2.5x on that narrative. But let's look at some other narratives that may run. So one of the big narratives that is running is crypto AI. So I just want to quickly open a crypto AI categories. Let's quickly look at, just so you can see what I'm doing here, so you can see how to do it at home. Although don't try this at home. I mean, you can try this one at home. There's some things that you shouldn't try at home, but this you can do. Trading 100x like that Korean streamer. He blew himself up for like over $1 million last night. Well, I mean, crazy. Okay, so crypto AI, last 24 hours, SingularityNet up 21.3, Fetch.ai up 5, Ocean Protocol up 4. There is a crypto AI narrative playing out. Why is the crypto AI narrative playing out? Because last night they launched GPT-4, which is the newest version of ChatGPT, and it is much more sophisticated than all the other versions. Now, I just want to show you how crazy this AI narrative is. So I saw some things that people were doing with ChatGPT-4. The first thing is it passes basically every exam. It doesn't just pass, it gets 90%. It got 90% for the bar exam, 88 for the ACE, for the LSAT. So look at all these exams that ChatGPT-4 has been able to pass. But that's not all of it, okay? So the scary part is that ChatGPT 3.5 failed the bar exam with a bottom 10% score. And in ChatGPT-4, it passed the bar exam in the top 10%. What's the difference? The difference is that the more you train the AI, the smarter it becomes. And in the time between ChatGPT 3.5, even it's not even a full tick, it's like 3.5 and 4. It has improved so much that it went from failing in the bottom 10% to passing in the top 10%. Here's a guy who who said, look, in less than 3.5 hours of having launched GPT-4, he got it to recreate a game of Pong in under 30 seconds. So literally to code a game of Pong in under 30 seconds. What else is there? There was a whole lot of other stuff here. Do Not Pay is working on ChatGPT-4 to calculate one-click lawsuits to sue robocallers for $1,500. Imagine receiving a call, clicking a button, call is transcribed, and a 1,000-word lawsuit is generated for people calling you without the permission to call you. That you can do. This happened all in 3.5 hours. Someone said it turned a hand-drawn sketch into a functional website. Holy shit. What is this going to do to jobs? I mean, if you're a web developer, you're shitting yourself now. You're shitting yourself, because I can build a website by just telling ChatGPT-4, and it's here, and all you need to do is pay $20 a month. ChatGPT-4 does drug discovery. Give it currently available drugs, and it can find compounds with similar properties. Holy shit, this is really scary. This guy dumped a live contract into GPT-4, a live Ethereum contract, and this immediately highlighted all these security vulnerabilities, pointed out surface areas where contracts could be exploited, and then verified a specific way I could exploit the contract. Now imagine paying $20 a month. So you pay $20 a month, and you run ChatGPT on all the DeFi protocols until eventually you find a vulnerability. When the vulnerability happens, you attack the DeFi protocol, you take all the money, then you phone them and you say, look, I've got your money, and if you give me like a quarter of them, no, don't do that. If you do any of this, I think you will end up in jail, and I think I'll end up in jail because of do it. So this has all happened in 3.5 hours of launching ChatGPT-4. Can you imagine what's going to happen by tomorrow? Can you imagine what's happened? And then I saw that I think Google's a little bit behind on this. Google launched this video. I think the video is terrible, but I mean, just shows what you can do. I just don't want to get killed for using their music. So we'll just go a little bit in and out of the music. So get this. You can collaborate with AI, and it can summarize your emails. So look at this. It can summarize your emails. Catch me up on this email conversation. And basically, ChatGPT just reads the whole email conversation and chats and catches you up on the chat conversation, which is great. And it says, help me write something. Let me put some music on. Write a brief based on these mails. I mean, this is all happening now. This is not happening in a year or 2 years or 5 years. This is all happening right now. Now, I've said to you before, I'm not a big fan of crypto AI because I think there are very few crypto AI projects which are real. I think the graph is real, but I don't think it's really AI. It's more smart contract data. I think render is real because you're going to need computing power to render all these AI applications. I think fetch.ai is real. I think SingularityNet is real, but I think it's just too hyped. So be careful not to fall into this trap. If you want to be trading AI, trade in and trade out, but don't stay there. Treat it like a whorehouse. Go in, do what you need to do, and get out. And take your wallet with you. You know the story. We've discussed this before. Okay, another narrative which is running at the moment is stablecoins. Thank you to the Fed and for breaking the banking system and showing us just how exposed the current stablecoin ecosystem is. We saw what happened because USDC had money in SVB. Because USDC had money in SVB, we realized that our stable coins that are centralized are actually not that centralized anymore. And we are in a position right now. I want to just show you this. Where did I put it? Yeah, this is a very scary chart. USDT's dominance is now 58%, which means that 58% of all the stable coins in crypto are right now in USDT. That makes me uncomfortable because if something happens to USDT, we are screwed. We saw what happened. We saw what happened when USDC got attacked. And it wasn't even that USDC got attacked. It was just the banking system that collapsed. Now there is a massive narrative on stablecoins. BUSD is shut down. So what does 𝗧𝗍 go and do? He says, okay, well, we used to have 0 fee trading for Bitcoin on BUSD. We're now going to move it on TUSD. What he's trying to do here is trying to promote a new USD coin that is not USDC, BUSD, or USDT. That's the centralized coins. And for TUSD, there's a $2.3 billion market cap. There's also a decentralized coin called Liquidity. Now, here, it's called LQTY. You can see it over here. They are a decentralized stablecoin issuer. It's a collateralized stablecoin against crypto assets. So just I'll show you how it works. And people have been trading this like crazy. So you put your ETH in here and you can borrow against your ETH. So it's collateralized by Ethereum. It's over collateralized. It's got $700 million TVL in this protocol. Now, why am I showing this? Because this is actually a token that you can trade. And of course, the degens have been trading this token. So look what happened to this token in the last 90 days. Went from 65 cents. It's now trading at $2.89. I think, again, that this one has run too much. It's already done a 4x or a 5x. You don't want to be buying into the end of a 5x pump because then you're actually the extra liquidity. But you do want to be realizing that there is a very strong narrative on stablecoins now because of what happened. When people saw the collapse of the banking system and what it did to USDC, A, they got into Bitcoin. B, they're starting to look for alternative money. Now, if Terra was around, if UST was around, I can't imagine the pump that we would have got in Luna today if it was around and it was healthy and it was sound, but it's not. And let's just move on. I don't want to talk about it. All right, a few other things. Let's talk about a few other things. You have Mark Cohodes taking on Vlad from Robinhood. So what I think I've made of the story is that Robinhood users are saying that the trading app won't let them cash in their profitable bets against Silicon Valley Bank. He's insinuating that maybe Robinhood is blocking its users from trading against Silicon Valley Bank, and maybe that there's some kind of link there. And this fight's getting quite ugly between that. He did say that Vlad will be in a lemonade stand business come Easter. Now, you know what happens when Mark Cohodes, he called Signature Bank, he called Silicon Valley Bank. So I think we need to listen to him. Some more news, 𝗵𝗵𝗿𝗍𝗶, they're saying that there's some news coming out today. I did see that. I did trade it. I bought it and I sold it at 110. Let's just see where it is now. I saw that the price was running too fast for me. So I bought it and sold it at 110. Let's see if it's where it is relative to where it was yesterday. I'm not telling you to buy this. I think this is actually 124.50. I think this is probably a sell the news. But they are a very big gaming studio with a very big chain, etc. Operation Choke Point hit the UK. We saw yesterday that Binance sent a mail saying that their banking partner in the US has stopped the banking on ramps and off ramps. So you can't. I mean, again, just Operation Choke Point in the US. 𝗧𝗏, we don't speak about 𝗧𝗏. Great DeFi protocol. Their mainnet is coming very, very soon. So we'll talk about that a little bit. Yeah, and then I want to show you a few other things. So one, you need to go and subscribe to Sniper School. There is a link below that allows you to get into Sniper School. Go there and sign up with your email address and get into Sniper School. I'll tell you why. For one, you go through a free three-week trading course, and it's amazing and it's a lot of fun, and you build a crypto network for life, and it's just a whole lot of fun. This is how cool it is. You learn about everything that you need to know, the rules of trading, how to keep a trading journal, candlesticks, how candlesticks work, trend lines, support, resistance. You learn about Fibonacci. You learn about volume and how to use volume to make money. You learn about moving averages. You learn about stochastics. And then you have a live workshop where we all trade together. And then you can see there's a whole lot of other stuff. Now, on top of that, we also have if you get through Sniper School, we have a crypto school, Sniper School University, where you go on a 3-month intense free trading course, 3-month every day intense trading course. And by the time you come out of it, you're a master trader. So go and sign up for that today. Also, one of our partners, BitGet, they have launched spot copy trading. So if you haven't got a BitGet account, go and sign up with a BitGet account because there's spot copy trading on BitGet. So it's not futures copy trading. And you can see how copy trading works is you put money in and you trade behind these people. Now, I don't know these people. You got to do your own research. Go look at who these people are. Go look at their P&Ls. Go look at how long their P&Ls have been going for, and then make a decision if you want to copy trade these guys in spot. And then I did say to you guys, lastly, but most importantly, we are launching an amazing promo very, very, very soon with OKX. Can't say too much, but I can say that there's going to be different prizes every single week. I'll give you some examples. First week is an Apple phone. Second week is an Apple Mac computer. Then there's a trip to go and watch Man City play live with us, with the Banter fam. So it's us and you. We go together to watch a Man City game live. Then it goes higher and higher and higher until eventually what you get is you can actually win a Tesla. So if you don't have an OKX account, go and get an OKX account, because every trade that you make already qualifies you into that competition. Even though I was only supposed to launch it tomorrow, I think I may have pre-launched it. I may have been wrong there. All right, before we go, let's quickly just look at the markets, just see what's going on here. Has Bitcoin obliterated the thing? No, it was rejected again. I mean, imagine being rejected this often. Like, imagine every time you ask someone to go on a date with you, she keeps rejecting you. You make like a cold call here, you make another cold call, another cold call, another cold call. She just keeps rejecting you. Eventually, it's like Tinder. You know, you scroll, and then until eventually, you know, someone's going to accept you. Someone's going to accept and put a tick on your name, and then you're going to get together. Same thing's going to happen here. Just keep scrolling, keep challenging that 200-week moving average, and eventually I think we're going to obliterate it. I hope. I think that's it. Unless you guys have got questions. I've got a few minutes. If you guys have questions, stop going to Tinder. And I'm not on Tinder. If my wife found out, that she'd kill me. So Chris says, story of my life. Someone says, why not Man U? Because 7-0, guys. Because 7-0. Benja says, adopt me. Is it Benja? Is it a boy or a girl? If it's a girl, send pics. We can talk. How is Bitboy? Don't know. Phone him. Great guy. Phone him. Someone says, any upside on ICP sometime? No. You can dump it. Yeah. Man United better than Man City. I think I agree. No, actually not. I used to agree. I don't agree anymore. All right, I see that you aren't asking intelligent questions. So because we're not asking intelligent questions, I think what we should do is we should cut the stream here today. We should see you guys again tomorrow. Someone says ayahuasca story. Phone me. I'll give you an ayahuasca story. I'll tell you exactly what happened. Market in the red. Which market's in the red? The S&P? Yeah, the S&P's been in the red for a long time. The crypto market, Bitcoin, is still 24,915. I think I'm comfortable. We just need, it's just one big breakthrough. Fiat deposit suspended on OKX. You might actually be right. Is Ryan Muslim? No, I'm not Muslim. I did study Islam though, so I can recite the first couple of sections of the Quran. I used to be able to. I think I've forgotten about now, but I used to be able to cite some certain sections of the Quran because I studied the Quran. I studied Islam. When Sniper Spaces, there isn't going to be a Sniper Spaces because Sheldon is pretty focused on school. You should actually go and get into his school. Hi, Mom. I'm on YouTube. Yes, you are, sir. How do we get into Banter University? Go get through Sniper School first, and then we're doing Sniper University. Sniper University, just so you get an idea of how cool it is, you're going to have mentors, like 4 or 5 mentors that basically trade with you every single day for 3 months. And then if you want to graduate from that, or if you do graduate from that, we actually give you a job as a trader at Banter. So it's going to be fun. If you want it. Run GPT live now. Love that. All right. When is Richard Hart coming on your show? When he launches Pulse Chain. All right, guys, we will see you guys again tomorrow. Until then, have fun, stay safe, and trade well, my friends.